morning with our financial focus and 13 financial analyst Steve Buden joins me now, and we got three big topics as always. But first, the biggie here: AT&T Time Warner here, possible merger. This is enormous.
Times are changing,
yeah.
And you're seeing two big bellwether companies potentially trying to merge. Now, again, I talked a couple of months ago about Yahoo and Verizon. This is along the similar lines. Now, the Verizon merger hasn't been approved yet, nor has this. It's just been announced. But AT&T is trying to acquire Time Warner. And you may not know the name Time Warner, but you certainly know the brands. CNN,
right.
News, HBO. A lot of folks love HBO. And I know in my house, Dora the Explorer is a popular one.
Yeah.
So it's a big media conglomerate that AT&T is trying to acquire. And the connection here seems pretty obvious to me, like Verizon and Yahoo is. AT&T is a phone company for the most part, and they're looking for content, and Time Warner certainly provides it.
So, and of course, people who have been opposing this have said, well, this is going to be and create a monopoly here.
Right.
But their argument is, well, not exactly, because these aren't overlapping companies.
Right. I would dispute the fact that it would potentially be a monopoly. But interestingly, they announced this right before the election because both candidates have come out and already said that they would not support this deal. And you can see both stocks actually are down today because of the fact that this would be a tough merger to get through, potentially new administration, a new Senate, when the time comes, and the regulatory environment's not going to go any better for these folks. So we'll see what happens, but it just goes to show that the times are changing, and a lot of these companies have to adapt with the changing viewership and the changing viewing habits of the young folks.
Okay, speaking of changes, say goodbye to Snoopy.
This is a tough one for me.
Uh-huh.
When I first started in my line of work, I actually worked for MetLife, and after 30 plus years, MetLife is saying goodbye to Snoopy. And anybody who has seen TV commercials over the years has seen Snoopy connected with MetLife. And at the time, MetLife was connecting Snoopy to the public because it was he was a great character, and it gave a face to an impersonal insurance company.
Yeah.
And MetLife said now it's time to move on.
It seems like it was successful because you kind of connect the Snoopy to MetLife. So why would companies do this sort of thing?
They did a lot of market research on this, and they, I guess, want it to be taken more seriously.
Okay.
And the nature of the financial services business has changed so much over the last couple of years that MetLife figured now is the best time for them to modernize. But again, just like the last segment with AT&T and Time Warner, MetLife feels now is the time to change, upgrade for the next 10, 15 years.
Okay, and real quick, we have the shops, the Miracle Mile, the changing owners. What does this mean, and who's buying it?
Yeah, and I bring this one up when folks ask me very often, why do I talk about these mergers? Very often our viewers are involved and they don't know. The Miracle Mile Mall by Planet Hollywood is being bought by a consortium, one of whom is CalPERS, the California Public Employee Retirement System. So many of our viewers are collecting pensions from the state of California. Now, potentially, you're part owner of that mall.
And it was interesting to learn that these pension or these funds are involved in real estate and investing in this level.
Well, these pensions have to generate cash flow to pay off their retirees, and a lot of them do invest in real estate directly in this situation. So anytime somebody goes into the mall, makes a purchase, some pensioner potentially is getting some of that income to live on. The pensions have had a very difficult time lately finding ways to generate income because interest rates are so low. They can't buy treasury bonds. So now what they're doing is they're looking into other vehicles like real estate to generate that cash flow to pay off their retirees.
All right, Steve Buden, as always, I appreciate the insight and the expertise. All right, thank you. All right, we'll be right back.